Dear Danièle, dear colleagues, dear guests, I would like really warmly to welcome you all for this panel. It's a panel on the topic Reshaping Banking Supervision in Times of Crisis. And before introducing my fellow panelists, I would like to take this opportunity to briefly reflect on the topic of this panel. Many of the speakers, Danièle, Herman, as well as Mario, already reflected on how fast this kind of changes came with respect to the European supervision. And when you look back into the crisis starting in 2008, a lot changed, a lot has changed, not only with respect to regulation, but with respect to the supervisory architecture. And as all the speakers said before me, we really were, I think we were the best pupil in the class with respect to speed and the radical nature of the changes. The first, I think, really concrete idea I heard about with respect to European banking supervision about SSM was in April 2012, so 2.5 years later. We are now ready. We started 2 weeks ago. And this is, I think, a good time to step back, to take the time to remind ourselves not only what we have achieved, that this is a historic moment worth of celebrating and to be proud of, but we should use this time too to discuss some of the most pressing issues we still have on the agenda. Some time to reflect what does it mean reshaping of banking supervision, not only with respect to the organization, the architecture, and the regulation, or the supervisory approach, all together. And I have a distinguished guest here for you in this panel, which I would like to introduce now. And I'd like to start with Julie Dixon, which has served as a superintendent of Canadian financial institutions. That was, OSFI. We all know her from OSFI. You served there until 2014, and I can tell you, Danièle and I, we are very grateful and very happy to have her as one of the ECB representatives on the supervisory board. I always tell my colleagues she's a real asset. She will contribute her impartial views from across the Atlantic to the discussions of this panel. And you will talk a little bit about the international consistency as well as the supervisory intensity and effectiveness. To my left, we do see Sven Giegold, which is known very well to all of us. He's member of the European Parliament and of the Committee on Economic and Monetary Affairs, and Marianne Thyssen, as well as Sven Giegold. They were the co-rapporteurs for the regulation on amendment of the European Banking Authority, and he was one of the European Parliament's key players in establishing the SSM. So we are really happy to have you here on the panel. And as I heard, you will share your views on sharing sovereignty in the context of the SSM. As a third one, Jonathan Fall, very happy to have you here too. You are the Director General, and you have been the Director General for Internal Market and Services at the European Commission since 2010, 4 years, tough work. And you contributed to the establishment of the banking union in many forms. And most importantly, the Commission tabled the proposal for the SSM regulation in September 2012. Mario already mentioned this 5 minutes ago. And you would like to share some insights about the way forward for the banking union, which is a very interesting topic too. And least but not last, we have Jan Seebrand to my far left, which has made a really impressive career in the private sector. Rabobank, Shell, ABN AMRO, and NIBC, and all are still there, as you said. Yeah. Before he joined the governing board of the DNB in 2011, and his current role is executive director and chairman for prudential supervision. And you are responsible for the supervision of banks and insurance companies, as well as for supervisory policies. And he will present his views on the lessons learned concerning the future developments in supervision. And we thought, we will give all of the 4 panelists 5 to 8 minutes to share her or his views. We will have one, I think, highly interesting question, which I will be asking the panelists, and then just to warn you, I will ask you whether you have questions. So you have the next 15 to 20 minutes time enough to think about really provocative questions for our panelists. Julie, would you like to start, please?
Sure. Thank you very much, Sabine. And I must say I'm finding it very interesting so far being on the board of the SSM. Today I'm going to talk a bit about international consistency, because that is very important to the SSM, as we've heard. And 3 aspects of that: rules, supervision, and lastly some new areas like stress testing and bank culture. So in terms of rules, I think it is, and by rules, capital, liquidity rules, etc., I think it is really important that a supervisory agency decide where it wants to be when it comes to rules. And of course, I can speak from a Canadian perspective. We decided a long time ago that we were going to meet or exceed international rules. And that became part of the Canadian brand. That really meant that where we did not like a rule that we saw, and there were many at the Basel Committee, we tried to get it changed before it was approved. But if it was approved, we met it. And there were lots of rules that have been passed over time which we didn't particularly like for Canada, but we met them. We thought that global consistency was quite important, and that's why we did it. And we also saw huge benefits with, in dealing with our banks. It created a lot of certainty. Banks all knew that we were going to be meeting the rules. So life was easier when they came to talk to you about something that would have involved a departure from the rules. The conversations were pretty short. They also, at the end of the day, and we saw that there was value to banks in meeting these rules and having a reputation for doing that. You get value from rating agencies, you get value from investors. But always meeting international rules and exceeding them from time to time certainly can open you up to criticism. And I think you have to be prepared for that. Banks will typically argue that they are different, that the rule is one size fits all, and that doesn't work. It will harm the economy. Now's not the time. The list goes on. And I think that most of the time the arguments that were presented were really opposition to sound prudential thinking. And we often said to banks, you can't have it both ways. Either you're in a jurisdiction where the rules are met, or you're in a jurisdiction where the rules are typically not met. And again, we saw a lot of value in being in a jurisdiction where the rules were met. And the banks, I must say, did enjoy being able to say, after the dust settled, that they came from a jurisdiction where the rules were met. And they talked about that a lot. So the question for the SSM is, what is our brand going to be when we are speaking about capital at the Basel Committee and elsewhere? And I think that every supervisor in the world is going to be looking at the SSM to figure out early on what your perspective, our perspective, is going to be. So I think what Danièle said was quite important early on. Supervision. Rules are one thing. It's easy. Not so easy that we, it can be difficult to see if you're meeting the same rules, but supervision is far more difficult because you cannot see it from the outside. It's even hard within an agency to see exactly what you're doing. In addition, there is a lot of judgment involved. So this is very difficult to determine whether you're being consistent globally. But I do think the SSM is uniquely positioned to get that consistency within Europe. I think it should also try to get consistency with the best regulators in the world. That is even more difficult to do, but you can try to do it by participating in committees like the Supervisory Intensity and Effectiveness Group, which unfortunately has not met in a while. But it is its papers are a very good source of information. The FSB is also doing a peer review of supervisory practices of a number of GSIBs, and that will be out in 2015, which will be good reading. One aspect of this consistency point is how we want to interact with banks. The quality of our decisions is really important, but how we interact with banks is equally important. And I think the leadership of the SSM is thinking about this a lot. Danièle referred to it in her speech. Sabine has mentioned it a few times in remarks she has made. We hear things like tough but fair, etc. I think it's very important to really focus in on that and ask a lot of questions about what we mean, because it's easy for people to misinterpret what tough means. I think we're trying to get a lot of dialogue with banks, but we must stick to good prudential thinking at the same time. And this is something where I think we will continue to have to focus quite intensively on it, because there is no agreed practice globally on how you should interact with banks. I would say Canadian regulators had a very different relationship with banks than US regulators had with their institutions. The UK relationship is changing with their institutions, and everyone will be looking to see where the SSM lands and how they continue over time. I think it's important to decide on what that interaction is and to tell the institutions what it's going to be, and to continually monitor and find ways to monitor how you're doing there, and that can be bank surveys or whatever. I will also say that in my participation so far in some of the meetings, I do see differences. This means that it is going to be a challenge to bring everyone together. And just, my philosophy has always been that for most matters, supervisory decisions don't create weak banks. It's the banks themselves that create the problems that they're facing. It's not really the supervisory decisions that are pushing that. The last item I want to talk about is the area of stress testing and culture work, because these are areas where people are trying to get consistency, but we've got some way to go. I think on stress testing, from a methodology perspective, there are great strides being made in getting similar methodologies around the world on how to do stress testing. One area, though, where there could be more discussion is on the idea of publicly releasing stress tests on an annual basis. I think I would like to see more discussion of the risks involved in doing that. And my own personal view would be that there are lots of risks in doing that every year and making it public. It takes up a lot of supervisory time. This is time that supervisors could be using on other things that could be more important. It is time that banks could be using to run scenarios that may be far more appropriate for the risks that they have. I wonder about the sense of security it creates, both in the marketplace and among supervisors and banks themselves. When you get through a stress test, you can have a false sense of security that you are okay. And in fact, it's one exercise and one scenario, and you really need to think more broadly than that. Lastly, the risk culture aspect. Everybody is talking about risk culture. I saw 2 speeches last month in the US. Dan Tarullo and Bill Dudley both talked about culture. The FSB put a paper out in 2014 which urged supervisors to proactively gather evidence on the culture they witness within banks and to discuss that with the CEOs and the boards. I think some supervisors are doing a lot here. Some have hired industrial psychologists. Some have not, but are still doing a lot. But I think that there are many supervisors who are not doing much here, and I think it is incredibly important. And we have been recently reminded of how important it is, and it should be something that is on the list of topics for the SSM. Thank you.
Thank you, Julie. Well, you see, we have all kinds of topics on the list of what we should do the next year.
Let's do it.
We do it. Sven, would you like to join the discussion? I know you would like to take a different angle, looking a little bit more on what does the SSM mean with respect to sharing sovereignty and kind of accountability. Would you like to start?
Well, first of all, I would of course like to congratulate you. Danièle Nouy, Sabine Lautenschläger, the board of the ECB, but also everybody involved in the national supervisors and of course the staff here at the ECB, because what you achieved during the last year is really extraordinary. Building an institution about which a lot has been speculated, and very little of these negative speculations we have heard have proven true, but we have an institution which stands now in the market with credibility. And I must say that this is a great achievement, and I think this is exactly what we as European Parliament wanted to see when we asked for common banking supervision in 2009 and 2010. Well, before the Four Presidents report was written, Jacques de la Rosière, who wrote the roadmap, he was not daring to propose your institution. Not because he didn't want it, but because he knew that in the Council it would probably never fly. The European Parliament then also proposed to have common banking supervision, at least for the very large institutions. But we could not get it from the Council in the legislative process. It has, and it belongs to history, that to be true and fair, to say that it needed a few other banking crises in the model of the EBA and plus national regulators model to get to what we now have and of which we can all be proud. I must also say that I'm very pleased that two tough and fair women now lead banking supervision in Europe. You know, I come from the Green Party. To me, it is a great pleasure to see women in control over this business, where women on board levels are still far too rare, and this will also give a signal to the market where the future of banking lies. Beyond that, of course, I hear from many citizens questions. Are there now too many powers in the ECB? So people ask the question, you have monetary powers, you have responsibility for financial stability, you have the responsibility of a de facto lender of last resort. You also have now expectations towards the ECB for providing economic stimulus. This is altogether banking supervision, a lot of power in one institution in the culture of of dividing and sharing power in democracies. So therefore, for the European Parliament, it was absolutely crucial that as we took this choice to give this responsibility to the ECB, that, and we had to do this also because of the treaty as it stands, and we had no possibility without a treaty change to create a separate institution. If we now took the decision that we need now the common banking supervisor and an existing institution, as Danièle Nouy was stressing, with the credibility of the ECB, of course, was a strong start for this institution in comparison to creating something new. But as we took this decision, it was absolutely crucial for us that the culture of independence of the institution in monetary policy cannot be sustained in fiscal policy. And also the treaty is very clear about this, because the independence of the ECB is not guaranteed to the same extent in fiscal policy as in monetary policy. And therefore we had during the legislative process one very important point, and that was to strengthen the role of the European Parliament to hold the ECB accountable. And we have now strong rights which are stronger than the rights of national parliaments to the former purely national-based supervision. So that is very important for the European Parliament. We have created a banking supervision working group inside of the Economic and Monetary Affairs Committee, and this working group has now access to the minutes of your supervisory board. It has the right to ask questions. It has the right to even initiate investigations. It has the right to even suggest that the chair of the supervisory board has to go. These are all rights which most national parliaments in Europe do not enjoy. And these rights were very important for us, and we will use them in order to make sure that we do not see traps as we have seen them in the past again. Because what I heard about the culture you want to create, I must say this is the culture of tough fairness or fair toughness. I'm not yet sure which of the two will in the end, but that is the culture we want to see. And this is the culture we need in order to avoid that we ever get into such a mess again. And we all know, if we look at macroeconomic figures, we are not there yet. And last point I would like to make, and then I finish. Of course, there are also important fears concerning the role of a common supervisor. I think the Parliament supports measures which lead to true regulatory convergence. And there are still, and I heard what you were saying, Danièle Nouy, that there are still differences in the law as well as in the practice. And if the ECB and the common banking supervisors helps to overcome these differences, such as ring fencing of capital, which you also mentioned, this is very welcome for the common market. On the other hand, what is not in the regulation is to create a uniform banking system. This means we have differences in banking, we have small and large banks, we have networks of small banks, they have different business models, they have even different accounting standards. They have to be treated proportionally without the objective to make a uniform banking system, but to be truly united in diversity, which doesn't mean that you treat certain better than others, but the differences should not be made all equal, because we know also from financial theory that a more diverse financial system is also a more stable one. Thank you.
Well, thank you, Sven. I think Danièle and myself, we heard the expectation of the European Parliament, yeah? To be fair and tough, or tough and fair, yeah? And to look for a level playing field where a level playing field is justified. Huh? Jonathan, level playing field, yeah? Regulation, where are we heading with respect to the banking union?
Well, I mean, I think we're entitled for about 3 minutes, that's all, to pause as we have done today and say thank you and congratulate all the people, and there are many in this room and there are many beyond this room who have got us to where we are. Sven is right, though, to remind us that it needed a crisis to get us to where we are. Once the political will had been harnessed all the way up in the European Council, we went very fast. And we can be pleased that we have gone from there, blank sheets of paper 30 months ago, to where we are today, a living organism. But it's only the beginning, and it needed a crisis for us to get the thing moving. But it has got moving. And since the SSM, we have added the SRM to the banking union. And I think the first lesson is that once the political will is there, our legal system, our political system, our institutional system works. and can work pretty fast. But this is only the beginning, and we in Brussels, at the Commission at least, are looking now at a new 5-year period, conscious of the fact, as was said earlier, that 5 years ago, at the beginning of the last Commission, we would not have conceived of banking union. We did not promise, think even of banking union. So we have to be modest and humble in looking ahead at events that we can foresee and others that perhaps we can't, and in the knowledge that the crisis is not completely over and behind us, so there is no room for complacency. The first thing I think we have to do is make the banking union work. We've created the institutions to do it. I think the political will is there to do it. The signs from the comprehensive assessment are that it is working, it can work. There are questions about how it needs to be completed. And of course, it has to be made to work in the wider European Union with the rest of the member states of the European Union. Those who may be planning to join the banking union in the years to come, those who say they will never do so. And as Julie reminded us, the rest of the big wide world out there with which we interact in so many different ways as well. So there are challenges facing us all to make the banking union, as we have finally conceived it and set it up, work properly. Beyond that, of course, there are many other things to do. The single rule book has to be put into motion properly by the banking union institutions, by the institutions of the member states not or not yet in the banking union. And there are work streams still underway at international level and in the European Union, which will be completed. The new big ambition, you all know, in Brussels, in the title now of my Commissioner's portfolio, in the title of my Directorate General, is Capital Markets Union. And of course, everybody wants to know, what is a Capital Markets Union, who's in it, and what's it going to do? And I think the weeks and months to come will provide answers to those questions. I haven't come here today to provide them. What I can tell you is, what I can tell you is that unlike the banking union, the Commission's very clear viewpoint on this is that Capital Markets Union is for all member states. It's a EU 28 project. It will include many work streams already underway which are designed to help capital move more fluidly into productive investment, and will no doubt include some new ideas and new suggestions as well. The Capital Markets Union is of course linked to and will be part of the investment plan which the new European Commission will announce very soon. And more generally, all of this is part of the European institutions' common commitment to do everything, to use famous words in this house, to do what it takes, everything we can, to get growth and jobs back into the European economy. That is the overriding goal of everything we do, not to the detriment of, not in any trade-off with stability. I don't accept that there is any such trade-off. The stability of our financial system is a platform on which we build growth and employment creation. Banking finance plays a very important role in the European economy. We all know that. Non-bank finance can play a greater role, and that is why the focus is turning to capital markets, instruments such as securitization, the European Long-Term Investment Fund, LTIF proposal, the identification in securitization of high-quality securitization criteria. These are things already very much on our minds and underway, and all of which will be revealed. These are very early days in the life of the new European Commission in the weeks to come, but I mean weeks, not months, because there is a real sense of urgency in the Juncker Commission to get the machine moving and moving very fast, because, as again was said earlier by President Draghi, confidence is key here, and we want to restore confidence to the European economy and all its various actors. Thank you.
Jonathan, thank you very much. So you heard there's at least 2 reasons why we will not be bored at all for the next years. The first one is that now, being 2 weeks, working hard, it's only a starting point, and I totally agree with you. Yeah, coming back to the list of Julie. Yeah, and the second one is we are waiting for the Capital Market Union to appear, and perhaps 2.5 years. Huh? Shall we set a date? Would be good. Yeah. Jan. Future developments in supervision. You see we have a broad spectrum here, but this kind of panel topic, reshaping banking supervision, there you can see, how broad, how interesting banking supervision is, from the approach to the regulation, and I'm really curious, looking forward to your remarks.
Thank you, Sabine, for the opportunity to make a contribution to this landmark event. I think right after the crisis, most of the attention has gone into new and stricter regulation. And I think only recently, over the last couple of years, it has also been concluded we have to supervise in a different way. Not just the rules, but also the way we apply them. And that's the background against which the SSM has been developed over the past 2 years. And I must say I'm very impressed at the very short time frame in which this mechanism has been created and the goal has been realized. And if you say mechanism, you can say machine. I think it's been put together by the best parts available. It is ready now to start. But now it's keen that we get it moving properly around now. This is the time the machine starts moving. And the parts which have to interact well are the ECB part of the SSM and the national supervisors who have to do their bit in the countries. I think the machine is there, but now it has to start moving. I think in the supervision there are probably 3 things which are relatively new and which are part of the SSM, but which need to start working well. One of them is that supervision has to be forward-looking from now on, not just backward-looking. If you look at before the crisis, the financial accounts, the regulatory reports, they did not warn us of what was about to come. They looked back and you couldn't see anything. The crisis was in the future, and therefore now we also have to pay attention to forward-looking aspects, to the strategy of the institutions, to qualitative aspects of how they operate, not only whether they comply with the laws and regulations, but also what the outcome is likely to be of the direction they're going. So I think we are moving from compliance-based supervision to much more outcome-based supervision. And I think we shall also devote more attention, not so much to what things are blatantly illegal, but also the things which are harmful in the future, and then do something about them. And that's why there is now a lot of attention in the SSM approach, in the SSM manuals, into business models, in how banks make their money, how they hold on to their customers, how sustainable is their business model, what are the strategic vulnerabilities, and all of that needs to be taken into account and is described very carefully in the business model assessment components of our supervisory approach. Another aspect of forward-looking supervision, Julie already referred to it, is looking at the governance and culture which is established in the financial institutions. If you look at the years before the crisis, the indicators of cultures would have been far more better indicators of the trouble which was coming ahead. And if we look at the behavior of the management, the composition of the boards, the quality of the leadership style, the effectiveness they have, all of that, the remuneration policies, are predictors of potential financial soundness trouble or integrity problems in the institutions. And that has to be an important part of supervision in the future. I could go on about forward-looking supervision for the rest of the evening, but I think a second key element is the collective risks, the interdependence of the institutions, the macroprudential aspects. This morning there was the first forum between the monetary and the supervisory parts of the ECB, which will in the future will called the macroprudential forum, and it was particularly interesting, and I think it is going to be a very important component also of the macroprudential supervision to take those factors into account. In day-to-day supervision, it will be implemented in the form of sector analyses, horizontal reviews, supra-institutional approaches, thematic reviews, all of that, not just the microscope on the institution, but looking at what is happening outside and what will affect them. And I think the challenge there is to have a uniform standard of analysis also for this macroprudential approach, but in the day-to-day supervision, tune it to the local circumstances. That's going to be another challenge, that we are doing this at too high over a level and that we keep also the focus on what is happening in the national markets. So apart from these two elements, forward-looking and collective risks, my third and last one is a difficult one. It's the subject of transparency. Transparency is a dilemma for supervisors. There's good reasons for secrecy and confidentiality. There is legal restrictions. But all the same, we have to be as transparent as possible. And there's a good reason for that, because we as supervisors are to a large extent independent. We are independent of political influences, independent of the financial sector. That enables us to act when it is necessary, without recourse to all sorts of interests which are there. But with this operational independence, and as a consequence, comes the need for accountability. And we have to explain to politicians and general public what we are doing. Ex ante, we have to be transparent what we wish to achieve by what means, and ex post, we have to account for the results we have achieved that way. The old approach to supervision, it was based on authority and discretion behind the scenes. I think in current society that is no longer what you can get away with. I think we have to be transparent and accountable. They are the two new words which come, I think, to supplement authority and discretion. And it is, I think, also very clear, as Sven explained, that transparency, accountability is deeply wired into the SSM design. I mean, the relationship to the European Parliament is very well established. As a final point on transparency, I think by having our institutions under our supervision to be more transparent themselves, we enhance market discipline, we boost public confidence and trust in the institutions, and thereby also the credibility of ourselves as supervisors. And therefore I think we will definitely continue along this path of transparency.
Thank you, Jan. Thank you. You raised one of the most difficult questions with respect to transparency and being a supervisor. That's true. Well, I could ask now about 20 or 25 questions, coming to the stress test, doing some kind of connections between the SRM and the SSM, etc. But I still think one of the most important questions we have right now to answer, and I thought I would take in the advices of the panelists here, are the question connected to Sven, to one of the things you said, the level playing field. Because I always hear what is the task of the SSM, and then you know, at least the first sentence or the second sentence is, well, you have to create a level playing field. What does this mean? And it's not only about supervisory approaches and level playing field, but it's about the basis of supervision, which is regulation. And then coming back to the national options and discretion Danièle talked about. So I would like you to think about what do you expect us to do. And I will not start with the ECB representative for the supervisory board, which, you know, at the end of this half round here, but I'd like to start with Jonathan. Is that okay? So what do you expect us to do? What do you believe should we do and can we do with respect to level playing field?
Well, this is the beginning of an organic process, and the impact of the SSM in the way it goes about its business, the way in which the European Banking Authority develops as the place where the supervisors of Europe come together, is something which we will all observe very carefully. We cannot predict in every detail, but I think it is reasonable to hope that once this process gets underway, we will see more convergence and more common practices across, first of all, the banking union and more widely across the European Union. Will there be a need for further intervention in terms of regulation or even the fundamental legislation? We will see. There are reviews and reporting mechanisms built into all the legislation. The Commission will do that job when the time comes, and it'll come pretty soon. Perhaps some would say too early in this organic process, but there will be constant vigilance. The market out there, the banks out there, will be the first, of course, to tell us if there are discrepancies which they find irritating. They won't tell us about the ones from which they may benefit, of course. That's for us, for you to identify. But we will build up a much better picture much more quickly of where the playing field is not level by doing what you are about to embark on, and we back in the Commission looking at the way in which the market is reacting and the way in which the supervisory world is working here and among the other supervisors in the European Banking Authority. Level playing field, and I take Sven's point entirely, doesn't mean everybody doing the same thing all the time. Diversity is far from being a disadvantage in this area. It is one of our advantages, and we will expect the SSM, the national supervisors in their own jurisdictions, to take account of that in the proper way. I think the legislation allows for that. If the legislation allows for too much discretion in the sense that the supervisory activities reveal difficulties which require further attention in the political processes of the European Union, they will get it. And the reporting and reviewing mechanisms are there for that purpose. So I'm not at all pessimistic about this. I think we have the right tools in place, and I think that without being in any way naively deterministic about it, I think the way in which supervision is going to work and the new relationships which will emerge between national supervisors, the SSM here, and the other supervisors of the member states in the European Banking Authority will provide all the opportunities for the identification of issues when they really arise, and then the political system can deal with them.
Okay. Well, I mean, nobody of us wants to have a uniform bank. Yeah? It is a danger in itself. Yeah? Sven, with about 100 national options and discretions in the EU law about banking supervision, etc., what do you expect us to do?
Well, I think after you started with your work, I'd like to get your list which of those we should try to get rid of first. So that's a less polite way of what Jonathan just said. Basically, the point is, the law is not set in stone in this respect. We are in a process of getting to ever closer union, and therefore the point is simply tell us, according to your common experience, which are the ones which really cause problems or harm, either because it creates an unlevel playing field or because it allows rent seeking in certain markets. And then, of course, the Parliament can take an initiative, the Commission can take an initiative to get rid of these differences where this is appropriate. And I must say that I liked a lot that you were stressing the importance of macro-prudential supervision. I believe that also in the Parliament, but also in general, there was a lack of debate about this. The micro is more easy to understand. So in the view of many ordinary citizens, it's some irresponsible bankers who were responsible of all that. There was a certain degree of irresponsibility, but also we saw certain macro trends like the building up of debt and of wealth on the other side, and a not corresponding growth of investment dynamics in the real economy. So we have macroeconomic problems, and they have to be taken into account. You cannot have stable banks without a limitation of imbalances in the macroeconomic sphere, and therefore it is of course a problem that also in macroprudential supervision the powers were divided so much between the national and the European, and it's important that the ECB uses its power to advance on that front, and I hope it will take also these wider questions of macro-prudential regulation and into account. So that's what I would wish.
Thank you, Sven. Well, another expectation. We need a list, Danièle. Julie, Jan, would you like to join and give your kind of views on level playing field? I mean, it must be funny for you, Julie, to look, as a Canadian on the European Union, on the Euro area, talking about, national discretions, national specificities, which for sure sometimes justify different rules. Yeah.
Yeah, I'm just sitting here thinking about this because it's a far bigger challenge. Within a country, you often had a particular bank saying the rule doesn't work for us. And often, we would say, well, we think it does actually, and so we applied it. But there were cases where the bank, had much bigger business that was being affected than anybody else. And typically, you dealt with that through a transition period. But I have a feeling in Europe the transition periods are a lot longer than what I'm used to. So, but it will be difficult. At least in one country, you're dealing with one tax system, and one housing market, whatever. There are a lot of different things to consider. So it is a challenge. I think that probably it would be easy to prioritize things, maybe group 1, 2, and 3. Because I think everyone knows there's certain things in there that really don't sit well with anybody. But I think it will be a challenge to deal with them all.
Yeah. Well, I wouldn't ask for having a list for 100, but doing a prioritization would be good, yeah. And I mean, looking on housing markets, yeah, there are 19 different housing markets from January on, yeah. So. Yes, for sure. Jan, would you like to join with respect to the level playing field?
Yeah, very briefly. I would say there should be no doubt that the emergence of the SSM and the Single Supervisory Mechanism and the quality control coming from the center is a huge step forward in a single level playing field in the supervision in Europe. There's improvements possible still as well, of course. I mean, if you look at the comprehensive assessment, some choices were made. I mean, the attention went on the asset review and particularly on ferreting out non-performing loans and providing for them correctly. That has been done. I think that is excellent work. What we had to deprioritize is also get the risk weights correctly. That takes more work, it will take a couple of years. We'll get that done. Also, because it was asset quality review, the attention was on the left-hand side of the balance sheet. On the right-hand side, there is still some unevenness, which will take some time to get ironed out as well. And I think all of that was openly disclosed in the report on the AQR, but it's still work to be done. So the field is not completely level yet, but there's a huge step forward.
Thank you, Jan. Well, I think it's time now to ask you whether you have some questions for our guests here. Do not be shy. Here are all supervisors. Lorenzo, please. Do we have a micro? Yes, it's coming. Okay.
Well, maybe I have a question for you, Sabine, for your special role that you have. No, bring some concern to the discussion from outside. I think that President Van Rompuy was right in saying that you need a crisis in Europe to start thinking about giving powers to European institutions. But it's also true that a crisis is not always the best time to start a new institution, because you have to build a reputation. And I think what all of you said was very important. You need to be tough and to be fair. And I think that, you know, from the other side, I think this is very much appreciated. Incidentally, I think that in the industry, people are very happy that an independent institution like the ECB has been given this power, because it's very far away from local politics. So from that point of view, I think it's right. But we are in a crisis. We are in a crisis. Bank lending is decreasing. The capital markets, maybe ideas will come out in a few weeks, but it will not be realized before years, I would say, for a series of very practical reasons. So the question is there a risk of collateral effects? That by being tough and fair, as you said, which is right, we don't produce the risk of accentuating the crisis, in the sense that banks, in the end, will lend less, will be discouraged to lend, and this will have macroeconomic effects that are, to some extent, a collateral effect. So how to reconcile this? Being tough and fair on the one hand, and on the other hand, making sure that we are not in a cycle of bank lending which is decreasing without having yet a capital market which is there.
Well, as you asked me directly, let me give you a direct answer. Yeah? From my perspective, being a good supervisor is for the question how good are the banks going to serve the real economy, something what has impact short-term, medium-term, and long-term. And I truly believe that not only the investors of banks, but that the banks, you know, when looking at each other, asking themselves, may I lend something in the interbanking market? Yeah? That they very well assess, judge the supervisor, and how tough the supervisor is, and how sure they can be that the worst risks are mitigated by a good supervision. Besides having capital, liquidity, good management, you know, we all know what it is, what you need in order to have a good bank. Yeah? So I truly believe that there is a short-term, medium, and long-term very positive effect of having a European and a tough and fair supervisor. But, you know, I'm not the one, I'm the moderator here. I'm, as always, the bridge, yeah? Would you like to answer?
I would like to say something on this. And I'm surprised that, although I'm not really surprised, but many actors, they are claiming that the problem of a lack of credit growth is mainly a problem of supply of credit. This, I think, is a myth. I think there is plenty of capital, also to very reasonable costs, in most sectors of the market. There might be some limited areas where there are problems, but in general, even in some countries where we have at the moment lack of credit growth, there is demand of credit. Why is it not taken up? This is not the fault of your institution and of tough banking supervision. That's the consequence of a lack of a rational economic policy in Europe which provides new sources of sustainable growth. That's our problem. And we should not blame financial regulation now for the problems we are having. And I would like to make, because also say something concerning that towards Jonathan, because I fear that there's now a danger that we repeat certain mistakes. So what I mean with this is we have in banking regulation and insurance regulation the special treatment of government bonds. This has political reasons. Now we create a new category of financial assets where the risk weighting is not based on sound economic figures, but on something which I would call prudential stimulus. So that means the risk weights in Solvency II, the calibration of liquidity figures in the LCR for securitized products are not based on sound microeconomic figures, but were reduced for political reasons. And I believe that this is simply a wrong approach. I think that these figures have to be taken from historical evidence. I'm not against securitized products. That's not my point. I'm also not against creating a special type of products which are seen as more safe and so on. But we still have the problem that the risk at the originator, which has to be borne with 5%, is too low. And second, we have this does, even if we create this special market, you cannot go below the risk weights which are justified according to empirical data. And I have the big fear that now with these economic problems, this is used in order to politicize again financial regulation. And I think that would be really the wrong consequence and would show that we haven't fully learned the lesson, and we have to be careful all the time that not vested interests push regulators again to take the wrong decisions.
Well, Sven, I'm very happy to hear from a representative of the Green believing in risk sensitivity, and I totally agree. Jonathan, would you like to answer?
Interesting. But why Green? That you explain me afterwards.
agree.
Well,
which risks don't we
Sven,
assess?
we were on a panel once with, you know, Monsieur Trittin, talking about the leverage ratio and risk sensitivity. Do you remember?
Okay.
But we can do it afterwards. Jonathan.
Finished, you too, yes?
Yes,
I got it now.
Listen, I would simply say that obviously there is no single magic bullet on either side of this argument, that there is, just as we said earlier, there are macro and microeconomic and prudential matters that all have to be addressed by the various parties responsible for them. There is obviously an issue of demand as well as of supply. And Sven is absolutely right to say that there is money, there is cash, there is capital, and the question is how to, or why is it not moving towards productive investment most likely to create growth and jobs. That is the challenge facing us. I don't want to get involved in the technical, certainly not in the political discussion, which Sven rightly raises, but is not a matter for me. We need to address the totality of these challenges, and between us, in the various European institutions and national institutions, we have the instruments necessary to do it, and we have shown that when the political will is present to use the machinery of the European Union, it can help provide the right answers.
Julie, you know, the question Lorenzo asked, is coming back to the beginning of this panel, I think. It's about what kind of reasoning one could have against tough supervision and tough regulation.
Yeah, and I mean, we face the same question in Canada all the time. Whenever we tried to raise capital, especially with Basel III and after, it was always, it's going to affect lending. It never did. So I think it's a good question to ask, because you can never totally say it's irrelevant. But I think you need to continue to focus on the supply and demand question. Yeah.
Would you like to join?
Yeah, sure. I think you're right. I mean, when in response to a crisis kicking in, you tighten the rules, they may be pro-cyclical. And the Basel Committee foresaw that, and therefore had this phasing in period of 5 years, and maybe it should even have been longer given how long the crisis lasts. But that is it. I think today, like I think the colleagues here say, today in 2014, I don't think capital shortage is the reason for limited credit growth. I think it's demand. That may not be the case in 2016, I don't know, but today it is not a real issue.
Well, we have 5 minutes left. I looked at the clock very clearly, and I know that Aurel wanted to ask a question. Perhaps you have to raise your hand so that they know where you're sitting.
Okay, thank you very much. The question would be to what Jan mentioned, the thing about this paradigm shift in supervision towards transparency and accountability versus more kind of backroom hidden thing. So it's and ex ante and also ex post. So it seems that there is some convergence towards monetary policy, where you have also more or less now open mouth policy and not kind of ambiguity. And back in 1996, before we started with monetary union, Baron Lamfalussy said nothing is more important for good monetary policy than good data, good statistics. And so the question here is, and he said it's not just for the decision making, but then for explaining and for being credible and trustworthy, because people and markets understand why you do what you do. And so the question is, how far would you now go in supervision by being transparent in publishing also data on the banks? We know from studies like from Bruegel that in the US, for instance, there's much more transparency on the individual data, on individual banks. So how far would you go now with this shift in paradigm?
Well, if you look at what happened in the comprehensive assessment, it was totally unprecedented how much information was basically given to the market. And I hope that that sets a new benchmark. I think it has to do, it is probably not in the same degree in all countries in the world, but I think the attitude of the public to authority is changing, and that's why you don't get away with the cigar and cognac attitude which was there before between supervisors and banks. But then you have, of course, the legal restrictions and also the consequences of disclosing information, which can be quite detrimental. So we have to move very slowly. But as I just said, I think the comprehensive assessment had really set a benchmark in transparency, which I hope we can maintain.
Andreas, the last question is yours.
A question to one of the bases of supervision concerning accounting. When you have been talking about diversity versus efficiency, this is definitely one of the fields that have to be thought about. And so how far would you like to us to go in this field, making it very clear that for the single supervisor it would be most efficient to use IFRS for everybody. This is not what we have definitely for the small banks, and eventually rightful so. So what would be your comments on that? Thank you.
Who would like to start? Jonathan? Accounting?
Well,
doing a level playing field?
Notoriously difficult and obviously extremely important. And if you want comparability across a level playing field, then being able to read the same language and write in the same language, and those who study reading it, building on what was said just now about the new paradigm of open accountability on all of this. Obviously, accountability, the very word is there, means that it's much easier to do on all sides if the accounting system is the same. The reason it's not is that there are considerable difficulties in persuading everybody to do that, quite obviously. And that hasn't changed yet. Will it change as part of this process? I don't know. As I said earlier, I think we're at the beginning of an organic process which is going to take us to places that we wouldn't have got to otherwise. This may be one of them.
Anybody likes to add?
Well, I would like to stress one point. During the legislative process, it was made clear that your institution is not allowed to exert any pressure to move everybody into IFRS. It is very clear in the regulation, and of course this will be one of the issues which will be watched in the Parliament. I see your difficulty, and it is very clear that data from local GAAP is not identical with IFRS data, and it makes it difficult for supervisors to compare the different banks. And although the number of non-IFRS banks is limited in your directly supervised banks, it gets much larger when you look to the others, and if you want to compare, you get into all sorts of problems. But obviously, now asking the banks to provide data which you can easily get from IFRS, but you can hardly get from local GAAP or only with difficulty, this is of course already the starting point where you move beyond what is allowed to by the regulation. Beyond that, obviously it would be much better to have common accounting rules. The only question is, which is not addressed, that IFRS in its underlying principles has real problems. It is pro-cyclical. It is basically allowing to show profits which you have not yet realized. These are things which have also something to do with the crisis. And the willingness of the IASB to take these problems seriously, I've only mentioned two of them. There are goodwill and others. There are also problems in the local gaps. It's also clear that certain derivative positions are not on your real balance sheet. This is, of course, a problem, only to give one example. But the point is, of course, I would like to have a European accounting model which is based on European values and which is under democratic control. But what we now have is, we have an international accounting standard board which is non-democratic, created with a hope to have one global standard, at least for the big ones, of which we know that the US doesn't move to really apply it. And therefore the big question is, and there again it would also be a question to the Commission, isn't it worth to create something which is democratic, where we collectively decide how our accounting system should work? That I think would be a true endeavor if we cannot get to a fair and globalized standard. And I can only say that in the European Parliament there's a lot of unease with the way how the IASB has treated several times requests of our institutions to take certain issues into account. And this is something which a Parliament does not easily accept. We co-finance the IASB operations, and we were not listened to, which has led to a situation that we have put their budget into reserve partly, and there's now a reform process led by the work was led by Mr. Maestad on the request of Mr. Barnier. And all this issue will be followed up, but as long as all this is not settled, so the fundamental problems democratically and on the accounting substance is not settled, I think it would be not appropriate that there's pressure exerted to move everybody into IFRS.
Well, okay. would you like to answer? I mean, the time is running out. A fast one, if you like to.
Simply confirm what Sven has said. There is a process underway. Philip Maystadt produced a report for the Commission on the governance of the IASB. There are indeed issues, and we will follow that up, and of course we'll remain in close contact with the European Parliament. Sorry.
Jonathan.
Langue de bois.
No, Jonathan, thank you very much. You were short and focused. Yeah? Well, let me wrap up. What I hear from our four panelists is about it is a starting point. There's still a lot to do. We got some homework from all of our participants with respect to consistency, with respect to level playing field, with respect to doing lists, with respect to level playing field, transparency. So a lot to do. I hope we will come together at some point in time to recap what perhaps in 2 or 3 years, will have been done. English is a very difficult language. And I like to now thank all of the panelists. I think it was an interesting discussion. I hope you feel like that too. I learned a lot. I thank Jan, Sven, Julie, and Jonathan for their time. I'd like to thank for your attention, for the very interesting question. Probably we could have done until midnight with the questions, so this gives us an opportunity to, in some years, come back. So remember your question.